Welcome everyone to today's webinar, Women in Finances, presented by John G. Allan and Associates. Many thanks to our presenter, Kelly Lewis, for being with us today and all the participants who have joined in. Please note this webinar is being recorded to share what we learn with the business community. Kelly will share her presentation with you, then follow with time for questions and discussion. Please use the chat to submit any questions during the presentation. And just a reminder, when others are speaking, please keep your audio on mute to minimize background noise. With that said, I'll turn things over to Kelly to start things off.
Let's see. Good morning. Thanks for that introduction, Candace. Welcome to the Chemung Chamber's presentation on women and finance. Like Candace said, I'm Kelly, so I'll be doing this presentation today. I wanted to start with just a little bit about me and tell you more about how I've got to this point. So I'm an attorney turned financial advisor, and I've been working as an advisor with John Allan and Associates for almost 7 years now. I work with more than 130 clients and their families. And during my first few years here learning the ropes, I discovered that our female clients face unusual hurdles that are unique to them. So almost about 3 years ago now, I decided to focus my efforts for education and growing my client base towards women. I started a blog and Facebook page hosted by John Allan and Associates called Womansplaining, a play on the word mansplaining, if you've ever heard that before. So for this Facebook page I focus on content that focuses on these issues, as well as throwing out some general financial information as well. So we'll talk a little bit more about that later. There are many challenges that we face as women. Some are more obvious than others. And as an advisor, I've seen it all. Well, mostly all of it. So everyone's situation is unique, but we can also find commonality with each other and the experiences that we face. So at John Allan and Associates, we're holistic financial advisors that work with clients who invest their money with us. So our primary focus is to be our clients' advocates in all things financial. Our firm has many initiatives for education and outreach that are currently in progress, with a lot of different advisors tailoring their approach. So we have an advisor that focuses on equine, for example, one that focuses on the medical profession, and then there's me, who focuses primarily on women's financial well-being. So our goal is to coordinate all aspects of our clients' financial health and create a cohesive atmosphere for their financial growth and development as well. From investments to insurance shopping, small business setup, estate planning, and taxes, we're the financial coordinator for our clients. So while there's so much information out there about women in finances that I could discuss with you, I want to focus a little bit today on the societal roadblocks that we face as a gender. So just as a broad overview. From there, we're going to dive into some important strategies that we can implement at any age that can counteract the gender-based societal structures that are in place. So in a moment, I'm going to jump into an example about how these societal structures, biases, and pressures have an impact on how women retire. Seems pretty broad, right? Well, in a moment, you'll see how our personal money scripts, which are our internalized views of money, combined with these societal biases, can affect women, sometimes without it being overt or outright. But before we jump into that, I wanted to share with you some statistics that I still find pretty shocking today. So the first is that wealth disparities tend to start at an early age, with parents paying kids that identify as boys twice as much allowance as those identify as girls. This is not always the case, but these are just some statistics I found. 65% of financial articles aimed at women told women that they are excessive spenders. So instead of focusing on investments or other points of financial planning, they primarily hit women as the spender in the family, which I found to be not very great. So another one is that 5 times more women than men live paycheck to paycheck without having an emergency fund. Women hold 71% of their assets in cash versus 60% by men. We'll talk a little bit more about how women tend to have a conservative investment nature in a bit. Women on average retire with 2/3 the money that men do, and that they are 80% more likely to be impoverished in retirement than men. So that's where we're going to jump into. This last 2 statistics is a great segue into discussing an example that affects us all, because let's be honest, we all want to retire, hopefully sooner than later, and we are all working to strive for that goal. So now before we jump into the example, I wanted to do a poll with you guys. So if you have your phone or your computer in front of you, I want to pose this question to the group. Your answers will pop up on the screen here, and we have a couple of these polls throughout the presentation. You can either text your vote or go to swiftpolling.com and enter that 17117 number. I'd like to just start this off as a discussion point. The answers are anonymous, so nobody will see these or see who typed them in. So if you have a minute, I'll hold for a minute on the presentation. And so in a few words, describe to me some hurdles that you think women face when saving in retirement, or saving for retirement, or that they may face in retirement. And then we'll go through them. If you have any struggles with the poll, or if it's not working, you can just type something into the chat box as I control the poll on my end. So with that, go ahead and type in some answers if you can. Also a reminder while we're waiting that if your microphone is not on mute, please go ahead and do that. I see some great answers popping up here. Thank you all. All right, so we'll start chatting about these a little bit as more come in, and then we'll jump into it. I'm seeing some that we will discuss. One is the pretty obvious one, the gender wage gap, which is a huge effect on our retirement savings, as well as definitely saving for different priorities, such as your children's college. I like the one earning less due to not working full time. It is actually more common for women to step out of the workplace full time and work part time. Sometimes the reason is for raising children as well. So that is a pretty common example for not being able to save for retirement. These are great answers. So thank you for participating here. We'll jump into it and discuss some of these a little bit more. There are a couple more polls throughout the presentation. So if you just want to leave it on your screen, you don't have to type in the number again. I will refresh the poll as we get to the next one. So tend you all. So with that, let's talk about what affects our retirement. There are both internal and external factors that tend to affect what we're able to say or what we're able to save. It affects both our knowledge about financial wellness, as well as our strategies used to reach retirement. So the first one I'd like to talk about is the gender wage gap. This one is pretty well known. So the gender wage gap is the average pay that women receive to the man's dollar. So here's what the most recent statistics we have. It's 86 cents on the dollar for Asian women, 82 cents for women overall, 75 cents for white women, 61 cents for Black women, 58 cents for Native American women, and 52 cents for Latino women. Now, what we don't have is a reliable statistic yet for non-binary people's pay rates. But in addition to this wage gap, women on average reach their peak earnings at age 44, which is still several years away from retirement. Men, however, keep climbing for much longer and reach their peak earnings at 55, which generally gives them longer time to see pay raises as well as saving for retirement. Due to these pay gaps, women on average can lose some $900,000 over a 40-year career. This is according to a recent estimate and research study. And this can obviously negatively affect your retirement savings in the long term. So now let's talk about a couple ways that we can counteract this societal-based gap. All right, the first is to ask for raises, particularly at the beginning of your career, but throughout your career as well. At the beginning, it's much less likely for women to ask for a raise than for a man. And without that initial bump in pay at the beginning of your career or at the beginning of a new job, for example, upon which many of your future raises may be based, the long-term effects can be enormous. So another less utilized way is to be open about discussing salaries within your company. Many companies and organizations bank on the fact that employees don't talk about their pay because it's taboo, and it is taboo. But let these feelings go. Chat around the water cooler or open a discussion with other women in your office that you know would be open to having this conversation with you, and see what you can do to find out if everyone is making equal salaries. It may be something that would increase the likelihood that the company would take a look at that. So the next one I'm going to talk about is conservative investments. Did you know that in general, women are more risk conscious when it comes to their savings and also tend to prioritize cash savings over investments? So a BlackRock survey showed that 72% of women rejected investments with riskier equities, bonds, or real estate, as opposed to 59% of men. So excessive caution can also cause women and men as well not to invest at all and to just keep their savings in cash. 31% of women that choose not to invest say that they make that decision because of fear of losing everything. So conservative investments goes hand in hand with life expectancy, and I'll explain why. So life expectancy men are expected to live to about 73 years old, while women are expected to outlive them by about 7 years until they're 80. So does it make sense to you that women both tend to choose more conservative investments with lower returns, but also need higher returns from their investments to last on average 7 years longer? Seems pretty counterproductive and counterintuitive at the same time. So what are some ways to counteract these two stigmas? One of them includes doing your research. Take a risk profile quiz. You can just Google these online and see what kind of volatility in your accounts you can handle. Statistically, women focus on short-term goals rather than the long-term goals and put raises and extra money towards either cash savings or paying off debt instead of investing for their retirement. So when you're younger, as well, statistically, you have time to ride out sluggish markets and recessions. So while it may seem important to invest conservatively, you may want to take this risk profile quiz and see if maybe switching up a little bit more aggressive investments might be good for you. Long term, you may see more volatility, but you have time to ride it out. But everyone is different in their investment choices. So just keep in mind your age currently and the length of your life when making these decisions. The next one I'm going to talk about is confidence. Traditionally, women engage less frequently in investing as a group than men do. Only 10% of women feel very confident about opening an investment account. That's a very low number, and I get it. If I wasn't in this field, I wouldn't even know where to start. Before I became a financial advisor and studied for my certified financial planner designation, I was just another lawyer who really didn't have a financial background. So it is possible to go out there and do your research and learn a bit. So most brokerage firms these days, such as Vanguard, Fidelity, T. Rowe Price, you may have heard all those names before, have robo-advisors, quizzes, and even sample portfolios that you can implement pretty easily. You just have to take that step. So it's okay to make mistakes in your investments. That's what rebalancing your portfolio and monitoring it is for. I don't know any investor that gets it right every time. There's usually mistakes built in, and you just have to come back from that. Adjustments need to be made. So take an hour or two of your life and Google the investments for beginners and find out where you fit into the economic structures in investing. The last one I want to talk about that affects our retirement as women is financial dependence. Now, this one is huge to me. Financial dependence is a situation where you need financial assistance from others in your day-to-day life to maintain your level of living. This could be from a parent or more commonly a spouse or partner. It can be with them having to literally provide you money, or it can be with having somebody else with needing them to manage your money for you that you earn. Now, as an advisor, I've seen it both ways. In a household with spouses or partners, usually one person is in charge of the finances and the other does not really follow it. So if you're living with a partner or spouse right now, take a minute and just think about who manages the finances. Is it one of you or is it both of you? So in general, it can either be the man or woman who is in charge, and this is constantly changing as our societal expectations and structures change. You may expect now that I would tell you to strive for financial independence, but that's not always the best solution either. If you're widowed, single, or divorced even, financial independence is really your only option. But there is a learning curve to restructuring your finances and managing it on your own. But actually, what I would recommend for partners is financial interdependence or cohesion. So as with everything else in a relationship, finances shouldn't be any different. It should be a give and take, and there should be no secrets and no dependent management between the couple. So you can choose to keep things separate still. It's very common to keep finances separate nowadays, but you can still help each other and work with each other to manage the household finances. It's very important to work through these financial issues together. So now that we've worked through this specific example of retirement, I hope you take away some of the things for retirement that are both roadblocks and ways to counteract those. Now, in general, there are a couple other topics I want to talk about that you can commit to changing that will put you ahead of the curve and help women as a group overcome the hurdles that we face. The first is to learn the lingo. So let's talk about what that means. There are so many aspects to finances that you may not even consider to be financial. For example, estate planning, insurance shopping, setting up and managing your business, and how that intermingles with your personal finances, and so many more areas like that. There may also be many financial terms out there that scare you off from learning more. So here is, we're going to walk through a couple examples. Here's where the next poll comes in. So if you want to go ahead and get ready, let me make this one live for you. We are going to walk through a couple financial terms together. Go ahead and type them on the screen here. Here's the question. It should be live. Type something in the chat if we face some hurdles here. What is one financial term that you've heard and want to know a little bit more about what it means? You can type anything that pops into your head, and we'll just go over it now and hope we can all walk away feeling a little bit more confident in managing our finances and our financial wellness. So I'll take a minute here while we wait for some answers to pop up on the screen to walk through together. If I don't know the answers, because I don't know everything, you can always reach out to me after the presentation and we can walk through it together as well. There we go. All right, is anybody having trouble posting theirs? Looks like about one has answered. If you posted yours and it's not popping up, just type something into the chat box. This is my first time using polls here, so hopefully we won't hit many snags. Yeah, if it's not popping up for you, you can type what you said into the chat box here. So we have an IRA account as one, and then somebody else asked about a Roth IRA versus an IRA. So let's talk about those two as examples here. Those are great questions. An IRA stands for an individual retirement account. This is another way to save for retirement above and beyond what your employer offers if you're employed. It's also something that self-employed individuals can set up outside of their employment. So this is tax-deferred retirement savings. So there is a limit to the amount you can put into the account for each year. And you also have to have earned income to save into this account. The amount you put into it, you can deduct off of your tax return, so it's not taxable income. The Roth IRA is the opposite of a traditional IRA, where you pay taxes on that money now, and then when you hit the age of retirement, basically, then you can take out the amounts you've contributed and the amounts that it's earned tax-free. Whereas with an IRA, you pay taxes when you take it out. So they are the exact opposite of each other. But as long as you have earned income, anybody can set up these accounts. There are income limitations to these. So if you make too much money, there are restrictions. I think, for example, if you make above $70,000 as an individual, you can't contribute to a traditional IRA and have it be tax deductible, but you can contribute to a Roth IRA. There's a lot of intricacies to these. So if you have more questions or are interested in setting those up, get in touch with me and we can walk through your specific situation. The other question is the difference between an IRA and 401k. Thank you guys for typing those into the chat box. I think I figured out the problem with the poll here is that only one answer will appear. But I think I mentioned the difference between the IRA and the 401k is just namely the 401k is through your employer and has a much higher limit to contributions that come right out of your paycheck. The limit for 401ks for this year is $19,500, and you can max that out throughout the year. The IRA is an account you set up separately outside of your employer where you can save additional monies for retirement. All right. So if you think of any other financial terms throughout the presentation you want to learn a little bit more about, feel free to type it into the chat box. We do have one more poll. Hopefully the next one will work a little better. Thanks for your patience with that. So the next one I want to talk about is changing your relationship with money. Share your triumphs and your failures, and change your relationship, change the dialogue here. So I want to share this short 4-minute TED Talk video with you. I watch a lot of financial TED Talks, and I can't say it any better than this woman does on this conversation. So I'm just going to play this for you. And she's going to talk about how we can change our relationship with money and what we can do to utilize that.
When you think about money and your dreams and you're looking at your account, you're like, my bank account does not align with my dreams. Financial health for a typical American household can be stressful. We know that 46% of all Americans would struggle coming up with $400 in the event of an emergency. And 60% of all Americans will face that emergency within 12 months or less. When you ask the question, what does money mean to you? Most people will say things like, I feel anxious. And so the insecurities come, the shame comes. I think we have a fraught relationship with money because it comes with judgment. When you're not able to pay your bills on time, you can personalize that. I don't want anyone to think that I'm not smart. I don't want anyone to know that I am very insecure with money. I don't want anyone to know that I am super stressed out. So now let's change the narrative. You can't do it alone. And that's when your squad has to come in. It's taboo. We typically don't talk about our stresses when it comes to money. We need to come together as a group of friends, no judgment, no shame. Celebrate the fact that we've made a decision that we want to have a better relationship with money. That is worth applauding or snapping your fingers about. Once you've done that, then you get real. Nothing should be off limits. Where does this relationship come from? Why am I spending all this money on things that don't align with my goals? What are your fears? What are your hopes? What are your dreams? But then we start to take action. What can we do this week? Or what can we do this month? Money is not the end-all be-all. It's the mechanism to accomplish whatever your goals are. It does not define you. It's just a mechanism to accomplish what matters to you most. Ask yourself one fundamental question. What are you saving for? If you're saving for a car, if you're saving to pay down your debt, if you're saving for that rainy day fund, it will include short-term goals and it will include long-term goals. Visualize what you're really trying to accomplish. A vision board is a visual representation of what you're saving for. So if we break it down, go get a poster board. Get your markers, get your glitter, take magazine pictures, cut it all out. Have that picture of that great trip. Have the picture of you paying down your student debt. The vision board sounds like, oh, how can that really help? The point is your goals need to align with your behaviors. And the vision board is really a representation of where you want to go. And then how you live your life. And in the meantime are the steps to really get there. It's not about what you make, it's about what you keep. It's about understanding, do I have the ability with what I'm making to take care of my basic needs? And if not, what adjustments do I need to make? And then we start to break it down and talk about the tools. We start to say, do we have our savings account auto save, set it and forget it, or every day put $1 a day, whatever that rhythm is for you. The goal is the rhythm, not the amount. You can start slow, you can start small, but you have to start now. And then let me give you a trick. We all have impulses. Many times because the phone is always with us, we start shopping. Go out to any site, shop up, put it in your cart. Just don't hit buy. Wait 24 hours, go back and ask yourself, do I really need it? What about these items map to my goal? And if it's nothing, hit delete and you got your fix. It's also important to know that your self-worth is not determined by your net worth. This is something that we can do better about. You celebrate your wins, and when you make that misstep, no judgment, no shame, just get back at it.
All right. So I found that video very interesting. And one of the things she mentions in the video is that your self-worth should not be determined by your net worth. So while money is a tool for financial wellness, it's not the only one. So one study done by Princeton recently in 2018 shows that once you make $75,000 in income, money can't buy happiness above and beyond that. Up until $75,000, of course, you're meeting your needs, your initial wants. So the happiness tends to increase more quickly. But then once you hit that threshold, the amount of things that money can buy you does not equate happiness. It doesn't lead to your well-being. Now, there are other tools besides money that lead to your financial health. So let's walk through a couple of some key financial wellness tools that women can utilize to feel more secure with their financial health. The first is the emergency funds, also called a rainy day fund or an uncertainty fund. I actually have a client once who called it an FU fund in case he wanted to quit his job one day. So now, while every financial advisor is different, we all generally agree that building an emergency fund should be step one. Sure, you might have some debt to pay as well, and some may advocate paying down this debt first. But what happens if you have no savings because you're paying down all of your debt and you have an emergency, either a health emergency, job loss, or some sort of natural disaster? While some scenarios may seem more likely than others, if you don't have a backup savings plan to get you through emergencies, what happens then? You go into debt for an emergency. The last thing you want while facing the aftermath of a crisis is to get bills for thousands of dollars. Or, for example, when you finally find that new job, to have all of your new paycheck go toward paying off credit card debt that you built up during the emergency because you didn't have any savings. Credit card debt is usually the very common way for people to pay for emergencies. With high interest rates, 15, 20%, that can add up pretty quickly if you don't have a way to pay it back. Now, the recommended savings for emergency funds is 3 to 6 months of your fixed expenses. As a pretty conservative saver myself, I usually lean toward recommending the 6 months if you can. Saving this much may seem overwhelming to a lot of people. As you heard her mention in the video, most Americans, about 40% of Americans, don't have $400 in their emergency savings. So, but there's no time to get started like the present. Now, it could take you a few months to build this emergency savings, or it could take you a few years. But you just need to get started and to make it a priority for you. Now, the next one I'm going to talk about are the insurances. Many emergencies that you face can be covered by the insurances. Now, we're going to talk about life insurance, which is particularly important for women for several reasons. Married women need life insurance on their partners in often cases, because if you've established a healthy financial interdependence, like we talked about, you may have built a household financial system that relies on 2 incomes. If one partner dies, the other needs a way to rebalance the household finances. Life insurance can give you time to do this, whether it's to pay off a bigger mortgage that you wouldn't have taken out on one income, to replace car payments or combined debt, or to help cover the cost of children and raising children and sending them to college. If you have children, life insurance can be shopped to cover these types of expenses in the event of the death of one partner. If you have children, you may want to look into insurance coverage that if your partner dies, you have enough to pay off your debts and get your kids through college. If you're a single woman with children, the same can be applied. You can take out a policy on your own life so that if you die, your children have some funds to boost them up and help them recover, get through college, and even help them start a life as an adult outside of college. Now, if you're single or widowed or divorced with no children, there are usually fewer reasons to carry that life insurance policy, but there are still some. So, for example, my mom co-signed my student loans with me for college, and they are still in existence. So I took out a policy on my own life with her as a beneficiary so that if I die, she'll have this policy because the student loan company will go after her for the payments. I also increased the policy benefit a bit because it was really cheap. And I figured that, hey, if I die, she should have enough money to live life comfortably and do all the things she loves, because I know she'll just be miserable without me. There are a few types of insurances that I'll just go over briefly. There's term insurance and whole life insurance. So term insurance is exactly that. You have insurance for a set number of years at a certain premium, and then it either expires or you have to renew it. There are no permanent death benefits with this. but it's usually much cheaper and you can get more for less. So I have my policy through the New York State Bar Association. It was actually a great deal because of my association and membership with them. Now, whole life, on the other hand, is a permanent death benefit, but usually costs much more than term life insurance. So I generally lean toward buying term life insurance for most situations, as you can buy term insurance that will get you through raising children and the term of a mortgage, the reasons that you would need life insurance. So the next thing we'll touch briefly on is home, auto, and umbrella insurance. These three insurances are liability insurances. And with the proper types of coverages, you can potentially protect yourself from major expenses over the years. With each of these, make sure you check your deductibles and make sure you choose a deductible that you can afford at any time. You don't want to have a $5,000 deductible on your home if something were to happen and you can't afford that $5,000 out of pocket, as that is the first expense that you pay. Now, I want to focus a little bit on the umbrella insurance because it's less widely used, but it can be important if there's an incident that leads to costs higher than your normal coverages. So for example, if you're responsible for a car accident that results in a chronic injury of another party, that can add up to hundreds of thousands or even millions of lifetime expenses for that individual. If your auto policy only covers $50,000 or $100,000 in medical costs, that may not be enough. The umbrella will then step in and cover the rest. Umbrella insurance is usually really cheap. You can usually get about $1 million in coverage for around $100 per year. Definitely worth it. So if you are party to a lawsuit, you don't lose all of your assets or your wages throughout your lifetime. I've seen umbrella insurance come into play several times over my years as an advisor. It's just pretty cheap. You can call your current insurance carrier if you bundle your home and auto together. It's likely that they offer umbrella insurance as well. It can be a quick addition with a quick phone call. The last thing I want to talk about is disability insurance. And did you know that it's actually more common for a person of working age to become disabled during their lifetime than to face an early death? We generally hear about life insurance to cover the untimely death, but what about disability? What if you're no longer able to work anymore? It's extremely difficult to qualify for Social Security disability, so that's where having that backup insurance coverage may be worth it to you. There are some intricacies to this that we don't have time to get into, but if your employer offers disability insurance, it's probably relatively cheap. And I recommend really looking into it and potentially signing up for it. If you're employed or belong to professional associations, check out the offerings through there. As I mentioned, I have my life insurance through the New York State Bar Association, and my disability insurance is through the Financial Planning Association. Professional associations often have good deals or open enrollment periods where you don't have to do a medical exam to get coverage. This can be good if you have some sort of chronic health issue that would normally prevent you from getting good health coverage or cheaper health coverage, life insurance coverage, insurances. So if you are self-employed, you can shop these types of insurances right online. It's pretty simple. You don't need to be a W-2 employee and get these through your employer. So the next part I want to talk about are prenups and postnups. So I won't spend too much time on these, but most of us think that prenups and postnups are only for the rich or famous. But did you know that it can be just as important, if not more important, for the average Jane to have protection? I've come across several situations of divorce where a female client of mine loses so much of her retirement savings during a divorce. And what a devastating thing to have happen to you. And if you think about the timing of divorce, it's usually after you're a little bit older, you've been married for several years, and you may be closer to retirement age than you think. So what if all of your efforts for saving for retirement that we talked about just disappear, poof, and go to an ex-partner? Prenups are vital for your financial protection, especially since we have about a 50% divorce rate in this country. It's very possible that it could happen to you. So this is for those of you who are not married yet, but may get married someday. Having a prenuptial agreement could be a good thing to look into for your financial protection. The next one I want to talk about, we already talked a little bit about it, with our retirement example, and I'll stand by this. Don't be afraid to jump in and get investing. Get that retirement account functioning the way that it should. Did you know that if you don't choose the investments in your account through your employer, an investment is not automatically chosen, or an investment is chosen for you automatically? And it may not be the best investment for you or your situation. So if you have a retirement account through your employer and you've never actively gone in and chosen your investments, now may be a good time to log in, see what they offer, and see if you should make some changes. Now, if you have your own retirement account, such as an IRA, a Roth IRA, or this SEP IRA, you have to choose the investments all on your own. So you may very likely have opened the retirement account, started contributing cash, and just never chosen an investment. So if that's the case, all of your contributions are just sitting in cash, which is not going to do anything for you in the long term. So besides retirement accounts, you can also open just regular investment brokerage accounts. These might be shorter term investment goals or ones with a different level of risk associated with it. If you don't want to open a brokerage account quite yet, there are several apps out there that can help you get started in the investment field. So for example, Acorns rounds up every purchase that you make from a linked debit card and invests it for you into a portfolio that you pick based on your risk tolerance. Stash and Investor help educate you on all things investing while helping you choose your investments. And you can manage it all from your phone. Like she said in the video, we're all attached to our phone, so why not put our investments on there as well? So one more poll that I wanted to do, which I will make live right now, it's just a quick question. Do you feel like you're saving enough money either for retirement or for your short-term goals? So this should pop up on your screen right now. If not, let me know in the chat box. I just want to see how everybody is feeling in general about hitting their retirement goals. So I'll wait a couple minutes for you guys to do these. All right, great. Thank you all for your responses. You know, the answer is not different than what I would expect, is that most people tend to think that they're not able to save enough for retirement. We have about 75% right now saying that they don't think they're saving enough, and 25% saying that they're almost there. That's great. It's not uncommon to have these feelings, and retirement, if you were to retire today versus retiring in the future, it would look very different now versus in the future. A lot of people who retire these days have defined benefit pensions where they're going to get a monthly annuity for the rest of their lives in addition to Social Security, so that their savings may play sort of a backseat to those permanent payments. These days, it's less common to see those types of pensions where all of the saving lies on your shoulders. So while you may not feel like you're saving enough for retirement, you are saving. As long as you're saving, you're on the right track. Now, the younger you are, the farther away retirement seems, and it may not seem like a priority right now. But I'll tell you what, if you go online and Google a compounding interest calculator, type in what you're saving, whether it's $50 a month, pick an estimated return rate of like say 5%, and you'll see that even saving small amounts the younger you are will really help you in the long term, because the compounding earnings on your investments really add up over time. It's a wonderful thing. So even if you only contribute $50 a paycheck, start now. The younger you are, the better. All right. So the next thing I want to talk about, that's the last of the polls. Thank you for participating in those. I want to talk a little bit about estate planning, which tends to be a pretty boring subject for most people, but it's huge for women. You want to make sure you have that will that dictates how all of your assets are distributed upon your death. This can be your home, your car, bank accounts, or investment accounts. Now, retirement accounts and life insurances all have their own beneficiaries, so the will doesn't usually control this. If you don't have a will in place, the state will decide who gets your assets, or worse, who will take care of your children. So if you have children, a will is the perfect tool for designating a guardian for minors if you pass away unexpectedly. That alone is enough of a reason to get a will done. The other two parts to estate planning that less people have heard about are the power of attorney, which gives someone you trust the authority to manage your finances only while you're alive, but while you're unable to do so. So an example would be if you were to get hit by a bus yesterday and were temporarily in a coma, someone else can take care of your bills, your rent payment, paying off loans, or even gifting if you make annual gifts to kids or family members each year. The healthcare proxy is similar in that it gives someone you trust the power to make tough healthcare decisions on your behalf if you are unable to. Again, this comes in most common after an accident or in a surgery if somebody is unable to decide how to proceed. And those are my go-to examples. All of these are necessary documents, and I usually recommend having a local licensed attorney draft the documents for you, but I'll make a caveat is that if having an attorney draft these is out of your price range and your plan for your estate is pretty simple, you can use the well-known website LegalZoom to draft all of these as well. It's better to have something than nothing. All right, now the last one I want to talk about is debt and refinancing. Now, I added this to the slide just a couple of days ago because of the times we're in right now. Interest rates, you may have seen, are extremely low right now and are expected to stay that way at least through 2021 and partially into 2022. If you're carrying any sort of debt, it's worth to look at and see if you can refinance for a lower interest rate. In addition, if you carry outstanding credit card debt with interest rates up in the high teens and low 20s, maybe look into consolidating with a personal loan right now, as those interest rates are relatively low as well. One example is that I actually refinanced my student loans, or a chunk of them, recently, and will now be able to pay them off in 5 years instead of 10 based on the interest rate change. So that's a huge win for me. So remember that finances are ever evolving and changing. It's so important to keep up with the changes and continue to educate yourself about financial wellness and about how you can achieve it. As I mentioned previously, happiness is not based on how much money we have, but the secure feeling of our financial surroundings. We need to make sure that our plan is in place in order to achieve this secure feeling and that level of financial wellness. That alone will make you feel so much less stressed about money and all things financial. And with that, I'll leave you with one more statistic to empower us all and keep us moving forward in fighting for that financial wellness, even when there are hidden barriers, hurdles, and societal structures in place that try to slow us down. As of now, 40% of women are the primary breadwinners in their households. This number has increased significantly even since just the 70s, when a woman needed her husband in order to get a credit card. So let's keep this number going up. Let's get it up to 50%. I'm very encouraged by this statistic, and I just wanted to share it with you. So on that note, if you want more information or want to follow me, the best way to do so is on Facebook. You can look up for the Womansplaining, which is a financial wellness blog for women by women. That's my logo over there on the right hand of the slide. You can also subscribe to my blog at jgua.com/womansplaining, where you'll get emails every time I put something new up. And lastly, you can do LinkedIn, where you can just follow me personally and I share all of my information. I just wanted to share my contact information on the screen with you guys in case you have any follow-up questions that are more personal than general. Candace, if we have a few minutes now, we can take some questions that I will try to answer. Looks like one popped up in the chat box. Who did I use to refinance my school loans? I'm looking to do this. I ended up using SoFi actually for my refinance this time. There's actually a really great website. It's called NerdWallet. You may have heard of it before. They update it every month on the top 10 websites. You can type in your information and they'll give you some estimates for interest rates, period of loans, and they'll send you to a lot of different online sites. Some of the most common ones are SoFi, Earnest, Common Bond. Those are usually the ones where I seem to find the lowest interest rates. Don't know what kind of loans you have, but if they're government loans, just be careful with refinancing because you could lose the protection of income-based refinancing. So just keep that in mind. If they're private, yeah, definitely. If you can capture that lower interest rate. I was quite excited to be able to get rid of mine 5 years earlier than planned. Any other questions? All right. Well, if anything comes up, feel free to email me or I guess get in touch with Candace and she can get you in touch with me as well. I hope you learned something from the presentation today and feel inspired to go out there and take a look at your finances and see what you can do. Come up with 1 or 2 goals that can make you feel more secure in your financial wellness. So with that, I'll see if Candace has any closing notes. Thank you all for attending today.
Thank you, Kelly. That was a great presentation, very helpful information. As you mentioned, if anyone has any questions, feel free to reach out to me and I can get you in contact with Kelly. And I can also share the presentation with everyone so you have that information afterwards along with the recording of today's webinar. So I don't see any questions popping up here in the chat. So if that's all, I think we can go ahead and sign off.
All right. Thank you all.
Yes. Thank you everyone for joining us. And thanks again, Kelly. Great presentation.
Bye.
Thank you. Thank you so much.